Affordability is an issue impacting today's real estate market. With over 50% home value appreciation over the last 4 years and interest rates now at over 7%, buying a home is a challenge for many people. But if you have the means, this is still a very good time to buy a home. This is Trayte with this month's real estate market update. Home prices are not likely to come down in the valley anytime soon. We're still the fastest growing metropolitan area in America, and new home construction permits are still way down. As long as population and the demand for housing continues to grow, prices will continue to rise. Simplistic observers believe weak demand translates to weaker prices. It actually translates to weak sales. But for prices, supply is just as important, and it still remains drastically below normal. We would need to see our supply almost double for the market to achieve balance. Many people with the means to purchase a home today are waiting for the perfect home and the perfect time and the perfect price and the perfect mortgage rate. There are a lot of people who regret not buying when they could have 2, 3, even 4 years ago because they thought waiting would save them money. It didn't then, and it rarely does. Right now, prices are stable. Demand is down and inventory is slowly increasing. If you jumped in today into the real estate market, the median price of a home in the valley would be $440,000, down $40,000 from the peak in May of 2022. With 10% down and 7.25% interest rate, the monthly principal and interest payment would be around $2,701 a month. Then, once you own your own home, interest rates would either go down and you could refinance and bring your monthly payments down, or if interest rates go steady or go up, you'd be happy you bought now. Side note, most lenders are offering a free refinance when and if rates drop. But let's say that you decide to wait for rates to come down to 6%. And we have no idea if that will happen or how long it will take if it does happen. But let's assume they do within the next year or so. Appreciation in the valley over the last 10 years has averaged about 10% a year. Let's be conservative and assume just a 5% appreciation in the next year. The additional cost for the house would be about $22,000. That cost would increase the mortgage, and over time, it would cost you thousands in additional interest payments, assuming you don't refinance. Waiting a year might save you close to $2,500 when interest rates drop to 6%. But your home and your mortgage just went up nearly 10 times those savings. Penny wise, dollar foolish. There's a saying you may hear from lenders: marry the house, date the rate. Home values typically increase over time. Yes, it's expensive now, but how much more expensive will it be in a year, or 2, or 3? It's time to get married, and I'd like to introduce you to your next home. Give me a call and let the matchmaking begin. I'm Trayte from Russell Lane Sotheby's International Realty, your trusted advisor in real estate.